Hey everyone, welcome back to Corporate Decoder. Today, SMMT just filed its quarterly report and I am seeing some very interesting cash flow dynamics that matter. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is spending a lot on research and development, but they also just got a big infusion of cash from stock sales. Alright, let's dive into Summit Therapeutics Inc. Its latest filing for the quarter ending the 30th of June 2026. Looking at their balance sheet, as of the 30th of June 2026, Summit had about $419 million in cash and cash equivalents. That is a pretty healthy chunk. They also had around $271 million in short-term investments. So altogether, they have a significant amount of readily available money. Overall, their total assets are valuing in at about $752 million. On the other side, their current liabilities, the short-term debts and obligations, are around $103 million. And when you add up all liabilities and equity, it comes out to that same $752 million mark. Now, let's talk about how they are doing financially. This is the statement of operations, and it shows us their income and expenses. For the 3 months ending the 30th of June 2026, they reported a net loss of about $215 million. And for the first 6 months of 2026, that loss grew to nearly $405 million. These are substantial losses, which is common for companies in the biotech field that are focused on developing new drugs. A big chunk of their spending is in research and development. Looking at the 6-month period ending the 30th of June 2026, they spent almost $290 million on R&D. That is up from about $259 million in the same period last year. This shows they are investing heavily in their pipeline. Their general and administrative expenses, which cover things like salaries, legal fees, and office costs, were about $62 million for the 3 months ending the 30th of June 2026. For the 6-month period, it was around $125 million. Interestingly, this is a big drop from the same periods in 2025, where they reported over $360 million for the 3 months and over $376 million for the 6 months. This decrease is largely due to a significant drop in stock-based compensation costs, as noted in the filing. They do have some other income. For the 3 months as of the 30th of June 2026, it was about $4.8 million, and for the 6 months, it was around $10.6 million. This includes income from their investments. This statement shows the changes in the owner's stake in the company. As of the 30th of June 2026, their total stockholders' equity was about $630 million. This is down from about $658 million at the end of December 2025. We see here that they've had issuances of common stock, likely from employees exercising stock options, which is a normal part of stock compensation plans. A really big item here is the proceeds from an at-the-market offering. This means they sold a lot of their own stock on the open market. For the period ending the 30th of June 2026, they brought in over $227 million from this. This is a crucial source of funding for them. Now, this statement of cash flows is where we see the actual money coming in and going out. For the first 6 months of 2026, Summit used about $263 million in cash from its regular business operations. This is mostly due to their net loss, but they generated a significant amount of cash from their investing activities, over $222 million in the first 6 months of 2026. This comes from selling or maturing their short-term investments. And crucially, they brought in a massive $234 million from financing activities in the first half of 2026. This is primarily from those at the market stock sales we just looked at. This shows they are actively raising capital. A historical comparable to this is when Bed Bath & Beyond heavily relied on cash infusions to stay afloat in its later years. While Summit's situation is different, the reliance on external funding is a key point to watch. So, at the end of June 2026, they had a total of about $419 million in cash and cash equivalents, which is an increase from the beginning of the period. Let's touch on the company's core business. Summit Therapeutics is a biopharmaceutical company focused on developing therapies in oncology, which is cancer treatment. Their main drug candidate is called ivonescimab. It is a bispecific antibody, meaning it is designed to target 2 different things at once. It aims to combine the effects of immunotherapy by blocking PD-1 with the benefits of anti-angiogenesis by blocking VEGF. They have this drug through a license agreement with S.M.M.T. Inc. The deal with S.M.M.T. involved a substantial upfront payment. Back in early 2023, Summit paid $474.9 million in cash and issued 10 million shares of its stock. Later in 2024, they amended the agreement to expand the territories for selling S.M.M.T and paid another $15 million. They are looking at potential milestone payments to AXO that could go up to over $4.5 billion. Plus, AXO will get royalties on future sales. This is a big financial commitment down the road. Interestingly, in June 2026, Summit sold the rights to a drug compound called ridanilazole to a third party. This sale brought in an upfront payment of $0.5 million and could potentially lead to more payments based on regulatory and sales milestones. Let's look at the earnings per S-Hair. For the 3 months ending the 30th of June 2026, their net loss per S-Hair was negative $0.28. And for the 6-month period, it was negative $0.52. This negative number simply reflects the company's overall loss. Here we see details about their investments. They hold money market funds and US government treasury bills. As of the 30th of June 2026, their total investments measured at fair value were about $605 million. Stock-based compensation is a big part of their expenses, especially in the prior year. For the 3 months ending the 30th of June 2026, stock-based compensation was about $68.7 million. This is significantly lower than the $478.8 million they recorded in the same period of 2025. This large difference is due to a modification of their performance-based stock options in 2025, which changed how the expense is recognized. As you can see, the expense dropped from over $489 million in the first 6 months of 2025 to around $141 million in the same period of 2026. This section details transactions with people or companies connected to Summit. They have entered into sublease agreements with entities affiliated with Robert W. Duggan, one of their co-chief executive officers. There are also sublease agreements with Meiki Zangane and Associates Inc., who is also a related party. These agreements involve office space. This covers things like future payments they are obligated to make. They have lease commitments, including an operating lease for office space in Princeton, New Jersey. They also have commitments related to their agreements with AXO, including potential milestone payments. There was a derivative lawsuit related to promissory notes issued in 2022. This lawsuit has been voluntarily dismissed by the plaintiff, which removes a legal overhang for the company. Summit is also involved in an opposition proceeding at the European Patent Office regarding their patent for S.M.M.T. This is a challenge to the validity of the patent. This is a critical section. Summit explicitly states there is substantial doubt about their ability to continue as a going concern. This means that without raising more money, they might not be able to operate for much longer. They are heavily reliant on future financings, collaborations, and grants to keep their operations going and fund their product development. This situation is quite serious and warrants close attention, similar to companies like Rite Aid or Tupperware in their recent past, where significant financial distress led to major challenges. Here we see a list of official documents filed with the SEC. This includes certifications from their top executives confirming the accuracy of the financial reporting. Finally, we have the signatures of the company's authorized representatives. So, what is the story here? Summit Therapeutics is in a high-stakes race to bring S.M.M.T to market. They are spending a lot on research and development, which is expected, and they have managed to raise significant capital through stock sales to fund these efforts. However, their path forward is clearly marked by a substantial going concern risk, meaning they absolutely need to secure more funding to survive and thrive. The dismissal of the lawsuit is a positive step, but the ongoing patent opposition and the sheer scale of the R&D and potential future payments to AXO highlight the financial tightrope they are walking. The risk I am watching is their ability to continue raising capital on favorable terms to avoid a significant operational slowdown or failure. Alright, that is our breakdown of Summit Therapeutics' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.